My name is Alvin Brown. I'm a tax attorney. I'm with the law firm of Alvin Brown and Associates. Topic this morning is going to be on installment agreements. When we screen a new client and evaluate the situation, they have a tax debt, and in most of the cases, obviously there's other issues, but installment agreement means that you have a tax debt, you want to pay it, and the option is to pay it in installments. But before we get into that, we screen for see if we can settle it in an offer compromise. The financial forms that are used for an offer compromise and for installment agreement are pretty much the same. We file a form 433. It's a complicated IRS financial form. We pull the data from our clients, necessary attachments, and we refine them as needed by IRS rules and regulations, and we submit a financial request for an installment agreement with a legal memo that basically focuses on the tax policy encouraging the IRS to enter into an installment agreement. The statute that deals with installment agreements says the IRS may enter into an installment agreement. They may enter into it. It doesn't say they have to. So it's discretionary. An offer of compromise is a little bit more structured and has some objective standards. And so, but it's easy to project what an IRS person is going to do on an offer of compromise because those numbers are objective, and I can pretty well understand what the IRS is going to do before they know what they're going to do. But for an installment agreement, I also have an idea of what they're going to do. They look at the financials and they're going to make a determination of what you can afford to pay. The first thing to understand about installment agreements is they won't do it if you have any unfiled tax returns. So the tax returns have to get in, have to be filed, and of course you file them as accurately as you can and in good faith. File all of the tax returns that are unfiled. Otherwise, they won't even consider it. If you're in a business, they want you to be in compliance with your business taxes as well, whether it's your self-employment tax and certainly the payroll taxes. And if you have a business and you're doing an individual installment agreement, they want you to be in compliance with your business liability as well. Normally, they don't focus on the compliance issues until after the installment agreement is filed. But in any event, the installment agreement for me is a backup. I first try to see if there's any way possible I get the tax liability reduced in an offer of compromise. I always screen for that. But assuming that I know the IRS will conclude they can full pay, the installment agreement is the next option. And sometimes they're a lot more difficult than offers of compromise because it's a judgment call. They rewrote the manual on installment agreements in September of 2008, and one of the rules they put in the rewrite was if the IRS thinks you can full pay, they're not going to do an installment agreement. So I think that's made installment agreements much harder than they used to be. Let's put it this way: if you owe $200,000 and they see $200,000 in cash, they're not going to even think about it. If you have equity in your home of $200,000, they'll say pull out the equity and in full pay. And of course, that's where we have problems because you just can't pull all the equity out. Sometimes credit is bad, or there's a tax lien, and you can't get it out. So that becomes negotiable, and as an advocate, we will try and work through that those kinds of issues. We send our installment agreements out with a legal memo because Congress has really said very strongly several times, they've set forth tax policy encouraging the IRS to enter into installment agreements. And I'm always reminding the IRS of that tax policy that after all, and if you're agreeing to an installment agreement, you're agreeing to pay the underlying tax, you're agreeing to pay the penalties, and the accrued interest. So who's against that? Congress certainly has told the IRS many times, hey guys, enter into installment agreements if you can do that. One of the most interesting things that happened in installment agreements occurred in 2004. It was the American Jobs Creation Act of 2004. In that act, Congress gave the IRS permission to enter into part pay installment agreements. So that works, and we've gotten some of those through, and it's almost like a miracle getting them through, but the IRS understands it now. It took them a long time to get familiar with the law and to understand it and understand the intent of Congress. Congress basically is saying, get what you can, get as much as you can, and even if it doesn't full pay the tax debt within the 10-year collection period. Let me restate that. The IRS has 10 years to collect a tax debt. If you owe the IRS $100,000 and you're paying them $50 a month in installment agreement, that's all you can afford to give them, that's not going to full pay your tax debt in the 10-year collection period. So Congress is like, hey, take the $50. You get as much as you can. If it is determined that you can afford to give them $50 a month. In many cases, in this economy, people can't afford to give the IRS anything. One of the things I like about an installment agreement, though, is it does stop collection activities. While an installment agreement has, the way the statute's written, 6331K, statute says that if you have made an offer, then the IRS can't collect. So it's very, very important to, if the IRS is breathing down your back, to get in this installment agreement early, and that will prevent them from hitting your bank account or garnishing your income. So that's very, very important. In any event, to a large extent, installment agreements are what I call advocacy issues, and that is the IRS is going to push, saying we want it all now, and we think you can afford to pay it, and we're pushing back, saying no, we can't afford, we can only afford to pay a certain amount. And that's the contest, and that's the reason why we offer representation on those things. It's a lot tougher because of the discretion that is available by statute. The thing that I find really horrible is the fact that even if you're in an installment agreement, they will still nail you with a tax lien. And I believe that's counterproductive. I think that's wrong. They have the power to do that because the statute on tax liens merely says that if the IRS money, then the IRS has the authority to put a tax lien on you. Now the installment agreement doesn't change that. You still owe the money, so they have the discretion and the right to do it. I just think it's counterproductive because when you get hit with a tax lien, it goes into the public records, and it's going to reduce your ability to make money, to get a better job, to generate more income, or to grow money with regard to your business. So this little conversation that we're having is the type that I have with clients that come visit me, and I give these little ad hoc talks, and this one's on installment agreements. This is being done very quickly and very hurriedly. I don't really exceed 10 minutes on this. Call me if you have any questions. My phone number is 703-425-1400. My extension is 106. Toll free, it's 888-712-7690, extension 106. If you want to contact me by email, it's ab@irstaxattorney.com. Hey, thanks for listening, and let me know if I can help you.